Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the markets have stabilized a bit. So we are off the highest point of the trading session, but materially off the lows as well. So pretty much in the green. But we are quickly moving towards that flat line. So let's see where the last 1 hour of trade takes us. For now, the Bank Nifty has managed to show a decent amount of recovery, all thanks to the big move that we saw in HDFC Bank. That stock is up 2.5%, and to add to that, ICICI Bank is also perking up. So a couple of these heavyweights from the banking index is definitely which is supporting the sentiment for the overall sector. You also have IT Pack, which is outperforming today. Take a look at TCS, LTIMindtree, Infosys. All of these stocks are holding well in the green. What's in the red today is metals clearly. So whether it's a Hindustan Copper, a Tata Steel, a Nalco for that matter, across the board there is a bit of a pressure on the metals name. So that's something to watch out for. And then of course there are a lot of individual names reacting to news flow as well. But overall, Aisha, it continues to be about the broader markets yet again. The kind of cut that we are seeing in the small cap and mid cap indices after that cut yesterday, the pressure really continues and it's visible in wicks and advanced decline as well.
Oh yeah, absolutely. It's quite evident there. We've already seen a 10% decline in the small cap index from its recent top in any case, and it's grinding even further as we speak. So another 2% gone now for the small cap index, and you'll have the mid cap index as well come up on your screens. Today, of course, the pressure points are a mixed bunch really. There are some of the larger caps as well in there. Real estate, for instance, as a sector definitely is taking a bit of a step back. So both DLF as well as Godrej Properties are two names which are in the red as we speak right now. There's BEL as well, which is down about 4%. There's Hindustan Copper, which is down about almost 5% in trade. And then BHEL as well thrown in into that. That is also seeing some amount of weakness come by. But let's take our conversation forward, figure out from Kunal, Naresh as well as Shubhani Sarkar as to what the market texture is looking like. Kunal, just a word on the mid and the small cap indexes. You think further pressure to come? It's almost a 2% fall today on the small cap index.
Yeah, I think it's been more of a mid-cap and small cap related correction rather than the indices going through a sharp correction. So we've seen largely the Nifty and the Bank Nifty remaining in a range. We're still trading above the key support levels for both the indices. But I think for the small cap specifically, we've already seen I think a 1600 point correction from 16,700 to now 15,000 odd levels for the small cap index, and that index is now significantly below its 50-day moving average. So which means that the correction is now seeping into the smaller cap names in the small cap indices. Mid caps are still holding on to their key support levels. So I think till the last I had seen, the mid cap index was still trading above their 50-day moving averages. So I believe if there's any kind of a further weakness, that could probably get more exaggerated if the mid cap index also breaks below its respective 50-day moving average, which I think is around 1.5 to 2%, still lower from current levels. So I would believe that it's always better to now stick to large cap names given the kind of market scenario, and the mid caps and small caps would probably tend to correct by a few percentage points more at least.
Naresh, wanted to specifically get your view on BSE, which is reacting to the news flow of the transaction cut, charge cut, which is coming in from NSE by almost 1% and will impact their revenues by 130 crore rupees. And then there were experts on the channel who joined us to talk to us about how BSE might be following suit. So that stock is down 6% in the trading session. And the other one is Indigo. That managed to actually hold up quite well in the green despite the kind of supply pressure that came yesterday. But now, given the fact NCLAT has gone ahead and given Jet Airways to the Calcroft group, there's the expectation that there could be increased competition. So from the highs of the day, that stock has come off materially. Naresh, your view on Indigo as well as BSE then?
BSE Limited, if you look at it, it has made two tops around the 2600 mark, and the recent bottoms are around 2050 to 2100. If that breaks, it creates a short-term breakdown. So technically, the setup is still weak unless it starts recovering about 2300 levels. So for now, I would expect that it continues to go either sideways or down and break that 2050, 2100 mark. So it's best avoidable at current levels, waited out for some more time. Now going into Indigo, that's a stock which I recommended in the morning also and yesterday. The stock still looks interesting for the fact that over the last 3 times when the blocks have happened, it has created short-term bottoms. The last 2 times, the trend was still weak. This time around, before getting into the block, the stock was sideways. And the stock did not correct going into the block deal. So at 3200 odd levels, it had made 4 tops till now in the last 1.5 months. Post the block deal, we've crossed about 3200. So a breakout is done here. So it becomes a buy at 3150 to 3250. with a upside possibility of 3,600 to 4,000. So remain extremely bullish on Indigo at current levels.
It's a buy call coming in on Interglobe Aviation from Naresh. But Shimani, what is your own sense on the kind of mid-cap cooling off that we're seeing? You think was much needed, and do you sense that it could only get exaggerated in the days to come?
Hi, Aisha. Good afternoon. So, if you look at markets, the very ingredients that drove markets up, whether it be India's macro strength on a relative basis, corporate earnings or flows, those factors remain fairly intact. And what we have been pointing out is that valuations are something that we need to keep in mind. In that respect, if you look at mid cap and small cap valuations versus large cap, as well as mid cap and small cap in context of their own historic average multiples on a 1 year forward basis, small caps are now still trading at about 39 to 40% premium to their own historic average multiples, and mid caps are trading at about 14 to 15% premium. So, in that context, we continue to believe that on a relative basis, large caps are better placed, at least in the near term. We must, however, bear in mind that mid and small caps from an earnings trajectory profile will possibly see higher earnings growth over the next couple of years vis-a-vis large caps, where mid-teens earnings growth is what is expected. But clearly, from a valuation perspective, both relative as well as absolute multiples, we believe that large caps are better placed at this current juncture.
Okay, large caps are better placed, but just wanted to talk about a couple of these other names as well, Kunal. Of course, ITC, that's under pressure a bit. There's that expectation that BAT might come out with that stake sale anytime soon, perhaps sometime this week as well. And then there are flashes for you at the bottom of the screen on Sanghi Industries, wherein Ambuja Cements is likely to sell 2 to 3% of the stake of the company to achieve the public shareholding limits. On both these charts, what's the view?
So ITC, I would be bullish, Anisha. So I made a point in the morning today that I think 385 approximately is a very good support point for ITC. And remember, I think the stock had already gone through a correction. So I think 496 approximately was the high for ITC in the month of June, July, when the news started off to seep into the stock price. From there, the stock has corrected by almost 20% to come back to that 400 sub 400 levels where it's trading right now. So maybe another 3-4 percentage points from current levels, and I believe that buying the stock on dips as well as in correction could be a potentially a very good strategy for ITC, especially for someone who's a medium-term investor. Sanghi Industries, on the other hand, is a very high beta stock. So in the last 1 month, when the correction has started to seep into the stock from 150 levels, the stock has come back towards 109 odd levels. I think 100 was the low the stock had made approximately. But the volumes in this leg of correction on the stock seems to be on the higher side, which means that even if there is a phase of a rally or a bounce for the stock, I would believe that eventually the stock would probably tend to try and challenge the previous lows and maybe even break below those levels. So I think a better level to try and buy or enter the stock should be sub the 100 mark.
Okay, that's the take coming in on some of these buzzing stocks. But the NCLAT has indeed approved the implementation of the resolution plan as originally approved. Jet Airways can start business and operations subject to regulatory approvals after handover to SRA. In fact, Sumit Chaturvedi, my colleague, joins in with more details.
That's a good news for Jet Airways because it has finally been given go ahead from NCLAT that safety had a rock, the consortium that back on the top. Jet Airways can start lenders in 9 days and also 150 crore rupees worth of securities have to be expected as used for certain expenses. So this one has been decided by NCLAT. On the other hand,
okay, we'll try and reconnect that line with you, Sumit. It's just a bit of a patchy voice that we have. But just in the meantime, pull up the intraday chart of Sanghi Industries because that stock is reacting meaningfully now. It's high by 7 to 8%. The news is not anything material in the sense of making a change to their business fundamentals as such. Yes, Ambuja is looking at selling 2% stake, but that's purely on account of meeting the public shareholding as well. So not a big supply coming in, but maybe the street was just worried when will this happen and what will be the quantum. Those details are now out, and that's the reason that stock has seen a sharp spike on an intraday basis. Time now to slip into a very short break. When we come back, we'll try and reconnect with Sumit to get those details on the Jet Airways story.
Back with closing trades right here in ET now. The NCLAT, like we just told you, has approved the implementation of the resolution plan as originally approved. Jet Airways can start business and operations subject to regulatory approvals. Let me take it across to Sumit once again and get in more details. Sumit?
So it's a relief coming for Jet Airways because NCLAT has now approved handing over of the Jet Airways to the Kalirock consortium. The lenders have not got relief. They have to now implement the approved plan within 90 days. That's what we are hearing. Also, Jet Airways can go ahead and start operations subject to all regulatory approvals, and some of its money which was in a way blocked, now that can be used in by certain resolutions also. So in a way, it's good news for Jet Airways because the NCLAT was hearing the case. It was there since long time when Jet Airways overall the process was going on. Jet Airways approval was required to start operations, and it's an important, we can say, that development in the whole process of the Jet Airways coming back to skies.
Okay, let's see when does Jet Airways come back to skies or not. But yes, it's been a long drawn process and finally closing in towards the end. But Shibani, the entire consumption theme and the urban consumption theme, it's got good legs in the last 12 to 18 months. But do you think it's getting a bit toppish, the entire luxury, urban consumption kind of theme, and it's time now to move towards the mass consumption?
You're right, Anisha, that if you look at the way the consumption basket has played out across sectors and segments, clearly it has been premium consumption and higher end consumption, which has been holding up, while mass consumption has, in fact, in terms of recovery post-COVID, has been lagging. What we believe is that when you look at the rural or the mass segments, there are a few key data points that are now suggesting that at least there is a bottom that is forming from a demand perspective. First and foremost, if you look at real rural wages, those numbers are showing an upward movement, especially with food inflation remaining under check, and therefore real income after a long period of time is starting to improve. Second factor to watch out for will be the Kharif season. The Rabi season has been largely flat on a YOY basis, but if monsoons are normal and if the Kharif output is better, then that will also help in terms of boosting the income profile. The third factor to look at is employment generation, especially demand for Narega jobs, which have come down, which means that there is employment opportunity specifically from the infra segment, which is also helping boost rural income. What we believe is that there is improvement and possibly bottoming out. However, it's not a sharp V-shaped recovery, and it's going to be a slow and steady recovery where mass consumption is concerned. And hence, in pockets where there is valuation comfort, there would possibly merit a relook in some of these segments. But again, the caveat remains that it's going to be a slow and steady improvement.
Okay, that's the take coming in on the entire premiumization versus the rural plays or mass consumption themes and what's looking better in terms of valuations right now. Couple of names, HDFC Bank as well. Today, of course, it's one of those very rare days or coming after a huge gap when you got HDFC Bank as one of the top performers in the Nifty. That stock holding up nearly 2.5% as we speak. 1460 is where it is currently in trade. Naresh, let's quickly get a chart check going. You think momentum is going to be intact for HDFC Bank?
So HDFC Bank looks very promising in the short term because if you look at the price action over the last 2 months, the high was around 1480 the first time in the recovery initially. Then it made another new low. The next time the recovery high was 1464. 2 days back it made 1451. So this is the first time it is actually crossing the recent highs. So that's an indication of reversal, and sustaining about 1480 would be a much more confirmation. So out here, first it has spent almost 2 months consolidating between this 1350, 1380 lows and 1460, 1480 highs. And today it has been showing relative strength and momentum. So out here, positive on the stock, it could go back and test that 1530 to 1550 levels also in the short term.
Taking stock of some of the PSU banking names, J&K Bank, that's coming under pressure. UCO Bank is down. Indian Bank is the other one. Maybe a bit of a pressure building up in some of these PSU names in the last few minutes as well. But Shibani, that's the question, right? The street seems to be divided on PSU names, especially the banking sector as well. Because I've been reading the notes coming in from brokerages. The one end believes that PSU stocks have been running without the kind of fundamental backing, and then of course there's the other side which believed that there was enough value on the table, and you can't just compare it to the historic valuations of last few years when these stocks were underperforming. But there has been a significant re-rating given the government policy push as well. Which end of the debate do you stand on?
I'm somewhere in the middle because the way we look at the entire PSU pack, and you can actually divide it into two. One is there have been a set of companies where ownership level has been very, very, very concentrated, and therefore float in terms of free float in the market has also been low. And therefore, you've seen that multiples have re-rated faster than the earnings growth in some of these PSU names. And that's where we are cautious on. However, there has also been a set of PSU names, including some of the public sector banks, where there has been an improvement in terms of earnings profile, productivity, profitability, as well as return ratios. Many of these PSU names, including some of the banks, were trading at multiples which were extremely cheap and attractive, and hence you have seen multiples re-rate on the back of improvement in profitability. However, from here on, what we are doing is that we are evaluating every public sector entity on its own merit, not just because of a particular segment. However, from here on, for valuations to move up further, there has to be a roadmap for improvement in terms of earnings and profitability. And wherever in pockets we are finding that we do have exposures in those segments. Within the PSU banking pack, we believe that some of the larger public sector banks, which have liquidity, which have deposits and low credit deposit ratios, those merit a look, specifically because they're given the ROA or the return on asset profile, valuations still seem to be reasonable.
Right, okay, that's the take coming in on the banking pack right now. In the meantime, realty, of course, is one segment today which is under a little bit of pressure. DLF, Godrej Properties, both those stocks getting a little bit knocked out. About a 4.5% cut is what you're seeing on DLF. And the other one, of course, is Godrej, which is down about nearly 4% or so. Kunal, do you see this profit-taking bout sustain within realty?
Yeah, I think the correction should, extend for many of these names. So I think for the first time in the last, many weeks of the market rally and the price rally for the real estate stocks, you're seeing some sort of high volume price action coming back into many individual stocks. That could probably be a point where, there's a serious bout of profit booking which is happening into these names, as well as maybe some build up of, short positions in the FNO sides, especially for the FNO players on the real estate pack. So I would believe that this could probably be of an indication that maybe on the way down for these stocks, we could probably see the beta to be a lot more higher for these stocks than what it was maybe in the last 2-3 months when these stocks have gone through their individual phases of very mild correction as such. Even the likes of Anantraj, for example, is seeing a good 10% correction so far from its previous major swing highs of I think 350 approximately. DLF has also gone through a 7 to 8% correction so far. In fact, more than that in the last 2 to 3 weeks. So I would probably expect that the real estate pack could correct further from current levels also.
Okay, so that's about the real estate pack, which might see a bit of a correction. Shibani, on that note, we'll let you go. Appreciate you joining us on the show. But Naresh, a quick question to you before we head into the break. What's the view on Keynes Technology? That stock is down almost 8% in the trading session right now. And in terms of the other gainers, well, there are names coming up like Balkrishna Industries, which was down yesterday. What's the view?
So Keynes has not seen a major correction all through post the listing from 800 to 1,000 rupees. Today is the first time it is breaking some significant lows. So at least a retest of 2,300, 2,400 would be normal. So for now, it's too early to actually look out for a buy here. Wait for some more time. Balkrishna Industries, again, that's a stock which has been in the downtrend for some time. Yesterday we saw downtick, today an uptick, but the trend still remains down.
Okay, point taken. So that's the view coming in on a couple of these, stocks as well. Time now to head into a very short break. But as we do that, a quick programming note. In today's segment of Sundaram Mutual Presents Wealth Creators SIP Edition Nivesh Day, we introduce STP for transfers between mutual funds and SWP for a steady income.
Back with closing trades right here on ET Now, and news just coming in. A light combat aircraft Tejas of the Indian Air Force crashed near Jaisalmer today during an operational training sortie. The pilot ejected safely, fortunately, and a court of inquiry has been constituted to ascertain the cause of the accident. The search for the black box is currently underway, and our network sources say that it was on its way to Pokhran. In the meantime, back to focusing on markets. Let me take it across to Ansh, find out what some of the F&O buzzers are at this hour.
आवाज नहीं आ रही? Yes. Right, so starting with TCS first, stock seems to have given a good breakout from its horizontal resistance zone, advancing for fourth consecutive session. Also, it has touched record high level today along with good volume, which is 100% more than its 20-session average, indicating bullish momentum. Apart from this, Balkrishna Industries will also be in focus as stock has given a good breakout from its downward sloping channel, crossing above the 20 DMA with volume of over 3 times its 20-session average, indicating a potential reversal in trend on upside. Lastly, Linde India is another stock to watch out for, as the stock has given a breakout from its horizontal resistance trend line and it trades above all key DMA levels as well. Also, today's volume was 20 times more than its average trading volume of last 20 session, indicating strong participation in today's breakout. So keep an eye on the stocks.
So much for joining us with those price volume buzzes as well. Anand Tandon joins us on the show to talk to us about fundamentals of a lot of these sectors, stocks, as well as the market which is in focus. Anand, let's begin by discussing the market itself, right? What do you think could be the next trigger for the markets? Because we hit that mark of 22,500. From there, we have cooled off, clearly lacking the triggers. Yes, we are waiting back for the macro data in terms of CPI, IIP, inflation, etc. But what do you think could materially move the needle?
The earnings. I think, frankly, the market has run ahead, way ahead of the earnings, so the market should be at. And the valuations are no more supportive now, unless and until there is something which dramatically alters that scenario. The market doesn't necessarily have legs to move up very far from here. That doesn't mean it can't go back to its previous peak or even a little higher than that. But that's only a 2 or 3% move. For a sustained move, you might finally need to have the earnings catching up. Right now, the market has gone up in anticipation that the earnings will be good. This quarter, if you look at the numbers that have come through, there have actually been more downgrades than upgrades. So finally, the analysts had turned far too bullish, and now they're having to tone down. So that itself will put a little bit of a cap in terms of how much the market can go.
Yeah, and clearly that earnings is something which is putting a cap in the market's mood right now. But what's holding out is clearly IT. Anand, you look at a TCS, you look at a LTIMindtree, Infosys, and for the last couple of days when the market has been a bit soft, IT has been doing okay. Time now to relook the portfolio and start allocating afresh to IT?
I would read the market more as saying that the momentum has been broken, at least for the near term, and therefore move back into more defensive areas. And therefore, perhaps a bit of give up on PSUs, defense, railways, and so on, which have led the recent rally. And instead of move back to things like private sector banks, FMCG, IT, and pharma. So, and if you see, some of those are the kind of sectors that have shown a little bit of strength. So I don't read it as something where you are saying that there is something exciting going on in those sectors. It's just that if you have to be in the market, you have to rotate out of those which have moved up too much. So what do you buy? You buy those which haven't performed so much.
Okay, so a bit of a sector churn at play. But Kunal, what about the IT pack? What are your top bets within that?
The two stocks which you mentioned, TCS and L&T, Infosys, both of them are completely distinct charts for themselves. So, TCS is perched at a fresh high for itself. It's crossed about that 4,150 barrier. It's a flag formation, the classic flag formation breakout for TCS, which indicates that the stock should see a good upside, at least for the near term, unless, the IT pack goes into a very sharp kind of a reversal for itself, which doesn't looks like that it's going to be the case over the near term. L&T Infosys is one of the stocks which was actually beaten down significantly. The stock had come back towards its major swing lows. I think, if I'm not wrong, L&T Infosys has also come back towards its 200 moving average, completing a major retracement from 5,600 plus levels, now 5,150, 200 odd mark for itself. The hammer pattern which is being formed on the candlestick pattern for L&T Infosys is the more distinct part about the charts over the very, very short term. So, which means that the mean reversion towards the 200 DMA formation of a bullish hammer pattern and the comeback from large cap IT names like TCS indicates that maybe we could now be at a cusp where many of these underperforming mid-cap IT stocks should see a good bounce. My expectation is that L&T Infotech Mindtree from current levels should see at least a 150 to 200 point bounce over the near term.
Okay, that's the take coming in on some of the other buzzers in trade. Balkrishna Industries, India Mart, AB Capital, IGL. It's an interesting bunch of movers out there from within the broader end of the markets. But just wanted to understand right now, Anand, what exactly is your take on whether or not you're looking at increasing allocations anywhere between, within the large caps and anything that is a preferred bet here?
I would think that right now for someone fully invested, you should be reducing equity allocation, and that's the first point. But within that, obviously, the small and mid cap had done too much and had even become more expensive than the large cap. So obviously, one needed to move out to the large cap and out of the smaller cap. As I mentioned, among the large caps, the defensives are the one that you can be hiding under. But if you really want to make money, you have to figure out something which is going to, actually change for the upside. Now, the only trigger I can see is a global trigger, which is that the dollar has started to go up, and it is very likely that around May or June you will find that the interest rates in the US also take a first cut. No matter how much they talk about independent Fed, the fact of the matter is every time you go into the election, the Fed becomes supportive of the market and interest rates are cut. Now, in that kind of scenario, you have to assume that all the non-dollar trades, counter to dollar trade, which is things like precious metals, things like crypto, things like oil and gas, are the ones that will benefit because they're all traded in the form of dollars. So I would argue that if you are looking for a significant upside from here, or at least a trading buy, those are the sectors that you might want to look at.
Right. Okay, Anand, stay with us. Lots more to talk about, but let's address the fact that it's all about infrastructure, and the government is clearly keeping its clear focus on massive upgradation and transformation of this entire sector. In fact, the Prime Minister himself has also said that in the last 75 days, the government has inaugurated or laid the foundation stone for projects worth more than 11 lakh crore rupees. Let me take it across to my colleague Samir and get in more details on all these projects that have got announced.
The country's infrastructure sector is currently going through a massive transformation and upgradation. In last couple of days, you have seen that the Prime Minister Narendra Modi is inaugurating, laying the foundation stone of hundreds of such infra projects, whether it be northeast region to Gujarat, from Kashmir to Kanyakumari. Each state is being given some or the other infra project, and that ranges to almost every sector, whether it be health sector, aviation sector, road and highways, or even the railway sector. And that is going to massively upgrade the existing infra sector. If you see, just on 12th of March, railway sector got projects, more than 5,000 projects, and that entailed an investment of more than rupees 85,000 crore. Similarly, on 11th of March, more than 100 highway projects were being given by the central government, foundation stone, or either being given to the country for the service, and that entailed an investment of over rupees 1 lakh crore. Similarly, there was a historic day when on a single day, Prime Minister gave 5 aims to the country. It was dedicated to the country, and that was in a single go. Similarly, more than 15 airports or the terminals were dedicated to the nation, and that entailed an investment of more than rupees 10,000 crore. If you see the larger picture, Prime Minister himself has said that in last 75 days, infrastructure project worth more than rupees 10 lakh crore has either been inaugurated, the foundation stone laying has been done by the central government. So with these sort of development, with this sort of hyper activity, the government is trying to portray or give a clear message of two things. One, that government is quite committed to their agenda of development, of bringing a transformation in the infra sector. The second is that the Modi ki guarantee, this term what the government is currently playing through, they are saying that whatever work has been done in last 10 years, that work is now bringing result. So that sort of work currently government is going through, and this will definitely help the country to improve the logistic cost, improve and reduce. Moreover, the connectivity will improve, and also this will help to boost up the economy as well.
Okay, thanks, Samir, for that comprehensive take on all that we've heard, at least for the last 10 to 15 days, and the kind of development and inaugurations that have happened right from hospitals to railways to airports and a lot more. But what's your take, Anand, on this? Infrastructure is clearly seeing a lot of boom. What's the best way to play it? Is it the road developers? Is it the cement play? What's the best way to play this entire infrastructure theme?
That's too wide a subject to be able to answer in a short thing. As you mentioned, you could play cement, but there is huge capacity that has come up in cement. As a consequence, capacity utilization has fallen and prices are again having to come back. If you are looking at the infrastructure players, they are already priced as if they will continue to get this kind of order book, and just increase in order book is not going to translate into higher top line anytime soon because they are pretty much at capacity. The banks obviously are also stretched in terms of the loans that they're giving. The credit to deposit ratio has now exceeded 80. So now it is going to be difficult for them to also push up the amount of money that they can lend. So there is no single way of playing it. Maybe the machinery sector is something that can continue to do well. But overall, from a perspective of the market, I think all the sectors that are directly related to infrastructure are already very heavily priced and discounting much of the upside. One should not be looking at discounting, double or triple discounting, as in saying that, okay, here's the spend from the government, here's the order book increase, here is this order book translating into sales, and then the sales translating into the bottom line. These are all the same thing. You cannot be discounting 4 times that in terms of the price. The market pretty much is discounting 2 or 3 times that anyway.
Sure, makes sense. That's the, play coming in or view coming in right now on the entire infrastructure story. L&T, let's see where that one is, because that kind of gives you a clear picture on, or rather this is one of the leader of the pack within the entire infra play, a conglomerate, however, currently around those 3,600 thereabout levels. And of course, there is a entire plethora of stocks which does come under the infra pack. But Naresh, since this is the most widely tracked, what's your reading on the charts of L&T?
It's facing resistance around the same prices where it topped out in January. The top was around 37, 38, roughly a couple of times where it topped out. Today also it's come in the last 2 sessions comes closer to 3,700 mark. So expecting some bit of a pause here, a dip to 3,500 would be normal. Or if it only goes beyond 3,500, that is where the momentum shifts lower. So for now, a consolidation between 3,500 to 3,740 before the next trend is much more clear. So for now, wait for a dip.
Okay, so that's about L&T. Since we're talking about infrastructure development and the kind of policy push we have seen, what is going to be the policy push for the 100 days if the government does come back to power and Modi 3.0 does work out to be true? My colleague Prakash is joining in to talk to us about the 100-day agenda that the NDA and BJP has laid out if they do come back to power.
Yes, we are learning from our sources that domestic manufacturing and expanding PLI scheme could be priorities of the new government. We are given to understand that asset monetization and agri-export likely to be in the list of priorities. Along with that, proposals related to direct tax reforms could be focus area of the new government. Sources are informing that ministries have started working on first 100 days agenda of the government that includes short-term and long-term strategy. When it comes to long-term strategy, that will cover new ideas that will help India becoming developed country by the year 2047. We are given to understand that ministries have started working on new ideas after PM's instruction to the Council of Ministers. Sources are also informing that the ministries will submit new ideas and the list of priorities after new government sworn in. Along with that, good governance and process simplification could be center of the policy making.
Right, okay, that's the take coming in right now. In the meantime, let's just quickly tell you about a programming note as well. In today's segment of Sundaram Mutual Fund presents Wealth Creators SIP Edition Nivesh Day. We're going to be introducing STP for transfers between mutual funds and SWP for steady income. Let's take a look at this special segment.
Okay, so that's of course about how SIPs and mutual funds can help you achieve your financial goals. And talking about SIPs, they continue to be very strong. 19,000 crore is what they surpassed in the month gone by. And for now, the flows were very strong in the small cap and the mid cap space. Of course, the big question is whether it will continue or not. But coming back to the markets and taking stock of all that's happening, just taking a look at the sectors now. IT, of course, is outperforming. Real estate, PSU Bank, metals and pharma, they are the ones which are actually in the red right now. HDFC Bank is your top gainer, while SBI is coming under pressure. That stock is down 2%, and ITC, on account of that overhang of that stake sale happening from BAT at some point of time, is under pressure. But Kunal, what's the view on the likes of Poonawalla FinCorp, which is up 5%, HEG, which is up 7% on decent amount of volumes? Would you be a buyer in some of these names?
So Poonawalla was something which I recommended in the morning. Very bullish on the stock. In fact, in the last 5 days, there has been a very consistent rise in volumes for the stock. And in the last 5 days, the first 2 days, the stock had actually seen a selling pressure. And then the subsequent 3 days is where you've seen the stock recovering. Of course, today being the best recovery day across the last 5 days for the stock. My sense is that with this 5 days of incremental volumes for the stock, it's formed a formidable base at this 425, 430 mark for itself. And I believe that from current levels, the stock should see a very strong upside. Wouldn't be surprised that the stock actually breaks past about the previous highs. I think 510 approximately was the previous high for Poonawalla FinCorp. So I'm expecting another 35 to 40 point jump for the stock over the very near term.
Right, okay, that's the take coming in on Poonawalla FinCorp, holding out quite well in today's trading session. IGL as well has rebounded quite nicely. That's holding up about 2.6%. We've already talked about as to how the street continues to be in favor of the OMCs, irrespective of that big question mark on whether or not they're ought to align themselves to the cool off in crude prices internationally or not. And yeah, the gas names also are seeing a bit of a rebound coming in. They're holding up 2.6% for IGL, and I think MGL as well has made a recovery. Balkrishna Industries, India Mart, AB Capital, these are some of the buzzers in trade. Within the Nifty, Reliance, by the way, has cooled off a tad bit from that day's top. That's down about almost 0.5% or so from its intraday peak. Maruti is holding up 1% though, and in bits and starts, some of the technology names are not looking bad. So NLTIM, TCS, Infosys, etc. looking quite okay right now. Naresh, let's have your thoughts in on IT and whether or not there is any material move or any trend in place for any of the IT names, large caps specifically.
So in terms of IT, TCS has been a stock which has hit a new all-time high, but the follow-up momentum is not great. But Infosys now looks interesting because it's corrected from 1700 odd levels to testing the previous gap, which was around that 1550 mark. So 1550, 1600 looks like a good entry point for Infosys. Then Tech Mahindra is the next one, which has consolidated around that 1250, 1300 mark. So that could be the next pick in that. And LTI Mindtree is one more which has corrected well from the top. So that these are the three names which look interesting. So time to shift from maybe a TCS to others for now.
Okay, point taken. Let's quickly take the BSE trades before we let our guests go. Kunal?
So I'll suggest two buy calls. A bit of high beta stock. Indiabulls Real Estate is something which I would recommend at current levels. Targets of 122. Stop loss could be kept at 105. And HDFC Bank remains to be a strong buy from a larger cap arena. The stock now completing a inverted head and shoulder pattern above 1450 mark where it's trading right now. So would suggest a buy with 1500 as a target and stop loss at 1440.
Naresh, what are your BTSC trades then?
So both names from the banking side. First is a buy on ICICI Bank. The stock has held on well. Stop loss at 1060, target price of 1100. Second is a buy on HDFC Bank, which is on verge of a short-term breakout. Stop loss at 1450, target price of 1480.
So the BTSC recommendations coming in from our technical experts. But Anand, if I had to ask you one stock idea, one big theme that you are watching out for, not as a BTSC trade, but at least a medium-term trade, what comes to mind?
Well, like I told you, I think if you're looking at the targets near term, you should be looking at the international market. And that is where I think your triggers will come, as well as probably the investment ideas. At this stage, I'm very bullish on Japan.
Coming in on that note, gentlemen, we let you go. Thanks so much for making time and speaking with us. Just taking stock of how we are closing in for the day. We started off well in the green. The handover was pretty okay for us, but I think it's just the macro data that we are watching out for. Remember, today we'll get the CPI data as well as the IIP data. For IIP, remember January, the PMI data was actually a bit better, and that's why we are expecting on a month-on-month basis from December, we are expecting that there is going to be a bit of a mild growth in January. To the 8th industry score data was on the weaker side, so we'll see how the IIP tracks. But in terms of inflation, that is very important to track as well. So we are expecting in the US, the number will be closer to 3.1%, pretty much status quo what we saw last month, and that will mean that the expectations for rate cuts will continue to be for June or July. Back home, we are working with a number of around 5.1%. There was a bit of volatility in the food prices, and that might come into the picture as well. But overall, pretty subdued for the entire macro setup as far as that is concerned. And the expectation is around 5.1%. But then we are closing in for the day. Last 2 minutes left. So let's take it across to Winnie to get the market close going.